welcome to this episode of Derek Invest. I'm your host, Derek Miller, and what we're going to talk about today is some aftermath of Monday, what it should mean to you as an investor, and what are we going to talk about? Well, we're going to talk about the importance of looking at the entire picture rather than small fragmented pieces. Now, as we do that, we're going to evaluate some stocks because that's what people love to see. But what I want to talk to you about is there's a lot of information out there, right? There's information from ex-market makers. Maybe they're still market makers. You have a lot of trend follower guys out there. They consider themselves professional traders. And it's not that they're not professional. Anything you do for a profession and you make a living at, you're a professional, and it's not knocking them as professionals, but a lot of times what they're doing is they're able to follow a trend while it's in trend. But when a trend reverses or something goes against them, they just keep widening their picture. And many times, as in like the last 11 trading days where the NASDAQ came down 15%, they just keep getting beat up because they don't know when to go short and when to go long. Not as in like they don't know because they're incompetent. They don't know because that's not what they do for a living. They identify a trend and then they learn how to stay within that trend, right? Without knowing how to identify when that trend's going to roll over. Market makers are looking at, well, they're the ones creating the market, right? They must be the most important guys because they determine who gets what and where that goes and why they're buying this and why they're buying that. So if you're watching the foundation, that should tell you everything. And then you have your trading desks, right? So your institutional trading desk, these guys are in there every day trying to make money. They're watching both of those other two guys, and they're figuring out which way the market's going to go. And then you have retail, which is just your average everyday Joe who's in there with his investments. He gets excited about this or he gets upset about that. And if you're looking at each of those individual pieces, you're going to say, well, I think the most important one's the foundation. Someone else says, well, I think the most important one is the guy that can stick with the trend. And someone else says, I think the most important guy is the one that has been around the longest, like the guys that are on the trading desk for Morgan Stanley. They're just too important. They have to make money every day. They do this day in and day out. And then someone else says, well, I think retail's the most important. They're the most of them. There's many more of them than there are of anybody else. I mean, look at what they managed to do via Reddit. Right? They moved an entire stock, so they're the most important. And the truth is, no one is the most important. And that's what I'm here to tell you today. They're all equally important, but you have to also understand everyone's role in this. Who are the strong hands? Who are the weak hands? And why they're that? And how that interplay affects the market so that you can bring it all together. I mean, think about it. In everything we do in life, the expert, the more you know, the more someone knows, the more they manipulate the people that don't. Let's talk about what does everybody do? Okay, buying a car. Let's talk about buying a car. So you have at the top of that list, I would say you're going to have like your Rolls Royce dealerships, Ferrari dealerships, these kind of cars, right? They're very, very expensive. And then the people that tend to buy those cars tend to do a lot of research. They tend to get as much knowledge about those cars as possible before they go in there. And they have a lot of money. So they have a lot of negotiating power. All right. So when they go in there, hey, the dealer has to profit. And then the person buying wants to get the best deal possible. But they're both pretty knowledgeable. So it's going to be a fair transaction for the most part. In most circumstances, that's going to be the case because you're dealing with two people that have big bank books and they know a lot about what they're doing. So it's really hard to manipulate in that situation. You're certainly not going to be able to drive a lot of emotion. You're not going to be able to just push someone into this. It's not like buying a Snickers bar before you check out at the grocery store, for example. So that's pretty fair, right? And that's probably your market makers and your institutional guys, the guys that work at the trading desks, right? They know a fair bit. They understand how the system works. They both have very big pockets. It's fair play, I would so to speak. And then you come down a little bit, right? And you start jumping into your Mercedes, your BMW, whatever. Now, look, we know that you can invoke a little emotion there. You can have a little appeal just based on for a man, maybe it's ego. right? Hey, look, this is the new Mercedes. It's this, it's that. It's going to show that you're this. It's going to show that you're that. This person starts getting excited. They're smelling the leather. They turn the car on. I mean, that's why you always go for a test drive in those particular cars before you ever sit down and start talking price and negotiating. Whereas if you go to that upper level where you're up there where cars cost millions, there's no test drive and no one's asking to test drive. It's understood. You're not going to get this person's emotions elevated to go buy a $2, $5, $10, $15 million car. Their emotions aren't going to do that. Right? But you get down here, you're still in very expensive cars. You're still 100, 250, 350. You're still in very expensive cars, but you can still start getting some emotional reaction. Now, the guy buying that car, he has a good deal of money, but he doesn't hold a candle to the dealership. Not anymore. He just doesn't. Now you start stepping it down and you start getting into your Fords, your Chevys, and now you're really talking about being able to work the customer. Now, this customer still has great credit, so you're not going to come in there and you're just going to rip them off, right? It's not going to happen, but they're going to get far more emotional. Emotions increase. They're not going to do nearly as much research, right? So the knowledge sort of decreases, and the dealer, his pocketbook now far supersedes that of the customer, and he can bully him a little bit. And if you get overly excited about that particular vehicle, that person owns you. Now, you really get down there in the dirt to where the person's broke, their credit's been destroyed, and you all know the dealerships I'm talking about. These are the used car dealerships that everybody hates. I don't care who you are. They want, 50%, 30% down on the car. They're going to charge you 50% interest a year. The cost of the car is 50% above what the car is really worth. I mean, you just get robbed. Now, these are the people in the market that just go, hey, look, NVIDIA's flying. I'm getting in on that. That's those people. Those people stand no chance at anything. But that's the market structure of selling vehicles. All the way from the Rolls Royce, the Maybachs, the super expensive cars Jay Leno owns and whatever, all the way down to the guy who, look, man, something happened in life. Life took a tough turn. He's in a tough financial position, and now there's really nothing he can do. He's just completely at the mercy of these people, and it's a bad place to be. Okay. Now, the reason I mention that is because everything kind of works the same way. Works the same way in healthcare. It works the exact same way in healthcare. You all know that. Who thinks that the wealthiest people in the world get the same healthcare as the people that are on state healthcare? Who thinks that? Raise your hands. Yeah, there's no hands raised. I know that. Name anything. Who thinks that people buying $100 million homes get treated the same as people that are buying, $300,000 condos or $50,000 homes somewhere in the Midwest? Think that's the same? Yeah, I doubt it. What about those that are trying to buy foreclosed homes, which is probably the bottom of the barrel? Okay, so we get it, right? We can carry that through anything. Who thinks you're eating the same food up here and down here? I mean, anything. Everything works that way. And you have to admit that to yourself. And once you admit that to yourself, you say, okay, well, I can't control how much money I have. Like you can to a degree, right? Like at your job, maybe you can save a little more. And this is where the joke kind of comes in when someone tells you to work harder and save more. Those will do micro things to your life by the time when you're born and when you die. That'll do micro for you. You'll make little tiny baby steps. You will. And if that's what you want to do, by all means, please do it. But there is something else you can do, and that's increase the knowledge base. Because the one thing you can do is understand the system and how it works. And once you understand that, now your smaller amounts of money can do a lot more for you. Okay? But you have to be careful because you'll have a lot of these guys pitching that they're the end all be all. The market maker is the most important. The trend follower is the most important. The institutional trading desks are the most important. No, retail is the most important. Reddit or whatever, right? No, they're all equally important and they're all equally identifiable. And you don't have to go, this doesn't take a million hours, right? Because what are all of those people doing? They're all buying and selling. Let me ask you something. If stock ABC goes from $1 to $100, and you're in 2024, you go, wow, look, ABC went from $100 from $1 to $100, and down here at $1, look at all that activity. Wow, that's a lot, huh? Man, everybody was in on that thing at $1. But then you come up here and it's at $100. You go, whoa, there's even more people in it at $100. Let me ask you something. Based on what we just learned, which is those with knowledge tend to get a better bargain, and those with less knowledge tend to run on emotion. Who do you think is buying at $100, and who do you think is selling at $100? You don't need to know the ins and outs of this. I will tell you exactly what's going on, and this is exactly how the market works. When you see massive trading activity at $1, guess what? The guys on the low end of the totem pole, they were buying this thing up. And a lot of that's institutional trading desks, whoever brought out the IPO, they're all loaded up on this stuff. By the time it hits 100, they just want to get people excited. And guess how that translates? That translates through volume, through trading activity. You cannot hide trading activity. The longer term time frame you're looking at, the longer term that you have to be as an investor. The shorter term time frame you're looking at, the shorter term you have to be as an investor. An investor and trader are interchangeable terms in my world. Okay? So there's one inevitable fact that will always take place when you see massive volume at low prices. Conversely, seeing massive volume at high prices. At a low price, if something falls 50%, let's say the 20-year Treasury ETF TLT, it falls over 50%, and there's massive amounts of volume, trading activity. You don't have to be a genius to know who created that, who's generating that. These are the people that drive markets. So what should you be doing? You should be doing it too. Now, as you see price rise, if you see that same trading activity reoccur 20 or 30% from now, what do you think that is? Well, they're selling out and retail's buying in because they know more. That's how it works. And that can be on any time frame. If you're looking at a monthly time frame, oh no, we're probably in for a big one. If it's on a weekly, that's a 2-year time frame. You're going 2 to 3 years. You're going, oh gosh, this is going to be long. And the shorter you get down to a 5-minute chart. Every chart is independent of its previous chart. You get down to a 5-minute chart and you still see that, right? Well, that's going to be an immediate short-term move, 2 to 3 days. If what I just said confused you or baffled you, be sure you're signed up for my mentorship course that starts in 2 weeks. I am only taking on 6 new students. I currently have, because I only take 10 students a time in my mentorship, I currently have 4 that are already signed up. Derek Me 752-636-05 is my Twitter handle. Honest-Trader is my LinkedIn. dmiller@Promethean Investing is my email address, which I'm having a problem with right now. But I should have it fixed this morning, but for some reason things are getting kicked back. I'm not sure why. So hold off on emailing me if you're interested, unless you can use my Gmail account, which is Miller Derek, DEREK 091@gmail.com. Again, Miller, MILLER, Derek, DEREK 091@gmail.com. If what I just said to you resonated, or you're confused by what I said when I talked about timeframes, that is very basic stuff that if you are trading, you should easily understand. If you're investing, and I don't care if it is for the long term, if you're investing, you should also easily understand that. And if you don't, again, you need to reach out. You need to get into my mentorship course that starts in 2 weeks. I have 6 spots left. Back to the conversation and why it's so important. So imagine this. And for all these guys out there giving you their independent opinion, so you're listening to a single market maker, you're listening to a singular trend follower, you're trying to follow the Morgan Stanley caller, right? So institutional trading desk, or you're on Reddit just following, that's all retail. So you're just following these independent little tiny sources, and they're all telling you that they know what's going to happen. But for some reason, there's a lot of double talk. Oh, look, there's a this here and there's a that there, and oh, we broke through. And remember, I said if we broke through and it feels like a lot of double talk, it's because it is a lot of double talk. It is. I spent the last 25 years of my life committed to what I do. And what I do is I was a financial advisor for 17 of those years, but I was also I was a professional investment and money manager at the exact same time. And so what I had to do was I had to put together all of those pieces into a system that made sense for my clients. Because knowing when to buy and sell, if you're following those independent fragmented pieces, do you know why they never work? Okay, we were talking about cars because it is the same thing as a car engine. If you have a transmission specialist, an engine specialist, an electrical specialist, a brake and suspension specialist, and what would be another specialist? Electrical, suspension, brakes, and then an auto body specialist. If you have all these specialists, they're completely independent of each other. Now, are they all equally important for keeping a vehicle on the road? My God, yes. They are all critical. But if you're listening to only the engine specialist who says, hey, the engine is doing great, and it's doing this, and it's doing that, and it's unbelievable, but look, see, there's this one putter on cylinder 6, and we're going to have to watch that, blah, blah, blah. But, we'll watch that, and if that happens, then that could turn into, cylinder 3 misfiring, and they're telling you, and they're right. But then for whatever reason, the putter in 6 goes away and they go, oh, we're good. We're all good. We're all good. No problem. Meanwhile, the transmission falls out of the bottom of the car. And then the market goes diving because the market is your car running on the road. The tranny falls out of the bottom of your car. Your car's off the road. The engine guy never saw that coming. He doesn't do transmissions. Now, he'll make excuses for why the transmission fell out of the car after it falls out of the car, but he had no way of seeing that coming. He was studying the way the cylinders fired. Just like if you go to the electrical guy and you go, electrical is all good. We have the electrons firing perfectly. Well, that's, for me, all I really know about that is plugs and wires, and that goes into the coil, all run and charged by the alternator. I mean, I know enough about cars not to get ripped off, and well, I could do a little bit of work. But anyway, all the electricals firing perfectly. You have nothing to worry about. Don't worry, your lights are going to work. Everything's firing perfectly. And then you start going down the road, and all of a sudden you're pop, pop, bang. That's because your piston you just threw a rod, and your piston just fired through the motor. Now, there's no way the electrical guy could have saw that coming. He does electric. Transmission shifting perfectly. You have nothing to worry about, blah, 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 blah. All of a sudden, your electric goes haywire. Your lights go off in the middle of the dark. You're going through Malibu Canyon, and you can't see any turns coming, and off the cliff you go. This is what happens when you're just listening to individual pieces. They can tell you, look, an engine guy can tell you how to manage the risk of an engine and how to keep the engine running. The transmission guy can tell you how to keep it shifting smoothly, and if there's going to be a problem. The electrical guy can keep track of the electric, so on and so forth. But that's not what you need. If you're in there investing and trading, you need somebody that knows how to put the car together. Someone who can say, look, all systems are functioning well. We have an issue over here in the engine. There's a small slippage from gear 2 to gear 3. Electrical seems to be all good, but there may be a misfire in plug 1. Suspension and brakes are good. The rotors need changed out, so you're going to feel a little wobble in the front of the car. That's me. That's who I am. That's what I do. And I teach you, to the best of my ability, how to do that in my mentorship courses and through one-on-one coaching. And how I teach you that is I understand what all the other guys are doing. And I also understand how to translate that into something that you're able to read very, very easily. I don't need 47 screens in front of me. Give me a laptop and a chart with price and volume on it, and I will give you accurate price targets, target dates, and the reason why that matters. And I am very, very accurate. I will teach you how to manage your risk, how to scale in and out of your positions, how to control how much cash you have on hand so that when days like Monday come, you're carrying enough cash to take advantage of it. But if you're following me, you already know that I know how to do that. You've already seen that. And if you have not seen that, go to my Twitter. You can just go scroll through any of my live videos over the last, 4 or 5 months. Every single day, I post some charts, not all of them, but I delete nothing ever. Go check me out. What I teach you how to do is take all of the information and have a well-rounded ability to invest and trade as an actual investor. I'm not the engine specialist. I'm not the transmission specialist. I'm not the brake and suspension specialist. I'm not the electrical specialist. I keep cars on the road running as smoothly as possible, getting them from point A to point B as fast as humanly possible, by involving as little risk as possible, by understanding what's going on over here. And I do that through 25 years of experience. Once you take my mentorship course, you are then invited to get my weekly and bi-weekly updates, which will be and should be all you will need, whether you are a day trader or whether you are a long-term holder who just wants to miss big bear markets, or maybe you want to miss corrections like what we went through the past 11 days. Great. That is exactly what it is that I do. Now, let's quickly just jump through some charts and see. In fact, you know what? I'm not going to go through charts today. I want you to think about the conversation that I just had with you and be honest with yourself. If you've seen that the people that you're following or the things that you're doing or the advisor you have or whatever it is, there seems to be a lot of double talk. Well, I can promise you this, and no one can argue with this. I am a straight talker. When I tell you something's going to happen, I stand by it. You want to know my accuracy? I don't need to be braggadocious. You go look it up. I go long and I go short, whether the market's rising or whether the market's falling. Going long in a falling market is a little more difficult because falling/bear markets are a little more brutal, but I do it. I try to keep myself market neutral as much as I can while outperforming my peers. My peers being everyone. Really, everyone is your peer. Everyone is your peer. But I can teach you how to very easily, for those of you out there who say, I have a financial advisor, I like him, I trust him, he's the guy I want to work with. Well, you could do that job really, really easily yourself and eliminate that 1% fee. And for those of you out there that want to make a career out of trading and investing, you've come to the right place. I have made more professionals than any school ever create. Right? Professionals that actually get in there and trade. And while some of you say, well, if that's so possible and you're so great, why haven't I ever heard of you? Well, there's a couple of reasons why I'm able to do what I'm able to do and they're not. And it's not necessarily because I'm smarter or I know more than them. It's just that I'm not handcuffed. What do I mean by that? Well, if you are, let's say you run a growth fund, you run an equity growth fund, okay? So you have to have the objectives for that growth fund. And within that growth fund, it might say the most you're allowed to hold is 10% cash or 15% cash or whatever it is. That person that runs that fund could see very easily that the market is going to fall 50% in a year. So he sees the same thing that I see. For whatever reason, when he went through and he got he's probably a CFA. So when he was going through a CFA course and whatever, he kept his mind open to the fact that there was a lot more to the market than fundamentals. And so he watches cash flow, and many, many, many do. So he sees this inevitable 50% drop coming. Guess what he can do about that? Nothing. He can rotate the different growth stocks that he owns. I mean, he can do that, but he can't do anything beyond that. He can't go to 50% cash. He would find himself in legal trouble. If max he's allowed to have is 10% cash, that's the max he's allowed to have. I don't have any of those handcuffs. I don't have to do that. He does. And that's why it's so easy to identify when he's selling or rotating. It's so easy to identify when a market maker is having to create a market for this guy. It's so easy to identify why a trend follower is all of a sudden we're going parabolic in an upward direction. Then I know what the bottom two guys are doing. And then retail's, of course, getting excited. So the guys that are getting completely manipulated because they just don't have the knowledge base or the wrong knowledge. So I'm not telling you I'm some superstar that knows everything and I'm just a genius and these guys are idiots. I'm just telling you that I don't have any handcuffs and they do. And you're not handcuffed either. You're a person. You can do whatever you want with your own money. So why stay bound to these rules that punish you? Like you can see something coming, but you don't move because you're in some fund with some guy. When it's easy to see it coming and get out of the way. Get out of the way. Don't sit there. He has to sit there. You don't. So that's the difference. I hope that makes sense to you. In any case, thank you so much for joining me. Remember, if you're not good up here, you're not good anywhere. If you're having a rough time, believe me, you're going to overcome it. You're batting 1,000. You haven't missed yet. How do I know that? Because you're still here. If you're feeling bad today, get outside, go for a walk, get in the sun, smile. You got to fake it till you make it sometimes, guys. Everybody always talks about that like it references money. But a lot of times, it just references you. I promise you, if you sit down and smile when you're miserable for an hour, your mood will be lifted. Feel better. Better things happen when you feel better. Thank you all so much for joining me. Remember, every day above ground is a good day. I'm going to do a second broadcast today, and I'll get into some charting. We'll evaluate some investments. Remember, if we're gapping up this morning, what happens to gaps, everybody? Gaps fill.